Now available on Tata Sky channel number 526.
Now, sales have risen 10% in the MMR region last quarter, spurred by higher demand for affordable homes, according to a report by consultancy agency Liases Foras. The report says homes below 30 lakh rupees and homes costing 25 to 50 lakh rupees led the revival in demand. On the flip side, luxury home sales dropped a whopping 23% in the last quarter. Thane, Ambernath East and Badlapur East witnessed maximum sales. Sales in Navi Mumbai also rose 26%. And most of the demand was seen in Ulve, Taloja and Karanjade. The report also finds that Thane spurred an 18% rise in new home launches. Maximum launches were seen in the 50 lakh rupee to 1 crore rupee segment. However, inventory levels are extremely high. On an average, it would take 4 to 5 years to sell off the current stock. Interestingly, the budget segment has the lowest inventory levels at 40 months. And in what should bring cheer to home buyers, the report finds that prices in the city have remained stagnant. And to understand that better, we are being joined now by Pankaj Kapoor, Managing Director of Liases Foras. Pankaj, thank you so much for taking time out to be with us here in the Property News and Magic Bricks. Now, sales have inched up. Is it time to say that the Mumbai market is seeing a revival for sure?
It has been. You can directly say that, right? Because in the last 2 quarters, I'm seeing that since the prices are not going up and since the interest rate started coming down, I see the improvement in the affordability of in the hands of the consumer. So if you look at the gap which is there in terms of prices and affordability is slowly reducing, and that's what is converting into sales. And that is also reflecting. So if you look at across the segment, wherever there is an affordable segment and the mid segment, there is a pickup in the demand, whether it is Thane or peripheral areas of Vasai, Virar, Kalyan, Dombivli or Panvel and Navi Mumbai sections. Anywhere the property which are available 60 lakhs rupees, I see there's a revival happening in that segment.
Pankaj, most sales are in the sub 50 lakh rupee band. Tell us, how is the industry reacting to this? Will we see more launches in that segment as well?
It is happening, and in fact, the way the government came up with the incentive they have provided, especially under the ATIB, my own sense is the new product setting will be more within that particular segment. So you would see unit sizes less than 30 square meter and 60 square meter will be the future new supply coming by. And there's a good demand and traction in this segment. So if you look at builders themselves are motivated to take incentives available under the scheme, and as well as there's a demand available in this segment. So I see the product setting is changing. And second is that there's no exuberance in the market, and that's what is clearly indicated. The new launches are much lower price than the existing prices, existing inventory prices within any location. So that's clearly indicated that there's a discounts available in the market. So there is no exuberance. Builders are changing their products. They are trying to meet the needs of the consumer. There are subvention schemes, other kind of schemes, financial flexibilities builders are willing to offer to bridge the gap which is existing between consumers' affordability and existing prices. And so some kind of a corrections which is available in the market, and I think that's what is resulting in this kind of a improvement in sales. Having said that, I still say that 40 months even in the affordable segment is not a month's inventory a market can sustain. A market should have a month's inventory 8 to 12 months of month's inventory. Then only you see that the projects maintain a healthy cash flow to take care of the construction cost and other costs. So the sales should improve probably threefold or fourfold. Only thing is that government also has to rationalize the taxes, because it's not a question that the developers are not reducing the prices. They have stopped increasing. That itself is a reduction. For 2 years, there's no increase in the prices. But contrary to that, in last 2 years or even before, I'm seeing that the ready reckoner or other government-related cost has been towards the upper side, and it has still been rising. So there's very little scope for a developer to reduce the prices. And my own sense that earlier conflict, which used to be that builders will always say the rising cost, and because of they are not reducing, I think that is gone away. They are willing to reduce because they have to meet their cash flow needs. But they can reduce to the extent the project viability permits. The government also has to think in that direction and rationalize the cost. Ready reckoner price rises has become one of the one measures which has become very unproductive for real estate. Otherwise, my own sense is considering current market status, builder would have increased by 15 to 20% prices, which frankly speaking, they do not have a margin. So that's why we are seeing a prolonged time correction, which is not happening sharp correction. Otherwise, Mumbai market with the inventory having close to 2 lakhs unit in MMR should sell in a year 2 lakhs. It is only selling 40,000, which is too less. And we are a housing shortage country. We have to do 11 lakhs more homes in Mumbai and more than 2 million homes to take care of housing shortage. The sales should improve. So in that context of it, I think there are market-driven rationalization happening, but the government-driven rationalization, if it happens, the market will attain efficiency much faster.
Pankaj, how long, before, home buyers take a call before prices start increasing? Do you think they have enough time, legroom now?
I do not see there's going to be any increase in the prices for next 2 years. So they can take a call. And my own sense is builders can't afford to increase the prices in this market also, even though the prices are increasing. So if you look at last 2 years, cost has increased, but builder has not been able to increase the prices. My own sense is even because the month's inventory is still holding at 40 months, even the affordable and the luxury other segment is still much, much higher. So I don't see there's a scope for price rise from here. My own sense prices will continue to be under pressure. They may not go down because there's a floor below which prices can't go down because projects become unviable. But I don't see price rise. So consumers should not look at purchasing property for the price rise point of view. Having said that, if they find the property which is available and they can afford and they can compute to their place of work and they are buying for self-use, I wouldn't say that today's market is a bad market for them to move in. It's a good market. It's an end-user market. Builders are willing to negotiate. There are cheaper products available. Regulatory bill is also now passed. It is going to be reality within a 1 year's time. So I think everything is in the hands of the consumer. So they certainly should really take their options and look at purchasing properties.
All right, Pankaj Kapoor, Managing Director of Liases Foras. Thank you so much for taking time out to be with us here on the Property News on Magic Bricks Now and putting that into perspective as far as our audience, the home buyer, is concerned.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/Magic Bricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magic Bricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magic Bricks Now.